Okay, everybody, it's Greg here. I know you can't see me, but I think you want to be sitting in this chair looking at some charts together. Isn't that fun? Stay with me. We got lots to go over. Let's go hit the charts now. Good day, everybody. It's Greg Schnell, and I am here to record the weekly market review for August 31st, 2019. Month end, weekend, lots going on. End of the summer season. Kids are getting back into school, so we have lots happening here, and we need to jump into the charts here. I have lots to cover off. So to find my blog, StockCharts.com, and then go to the articles tab and drop down menu on the right, and you'll find three choices. The Canadian Technician, don't ignore this chart, and Chart Watchers, please feel free to subscribe if you'd like to get them in your email. Thanks. Okay, and contact information, you can always reach me, Greg S. at StockCharts.com, or on Twitter at Schnell Investor. Our agenda today, US dollar hits fresh highs with a high close. Markets closed at the top end of the range. Industrial commodities lifted a little, and oils are getting interesting. And I know they're bombed out, but that's why they're getting interested. They're a commodity, so reversals are nice. Gold had a low close this week, closed on the low end of the bar, very close to the low of the week. And that's the first time since May since it broke out. And it looks like we're going to have one more run in the market, so stay with me. We got lots to cover. Let's go there now. Okay, S&P, as you can see, trying to break out of this range over here. Really high resistance at 29.50. It was resistance here. 29.40 was resistance here. We closed 29.25, so we got all kinds of resistance overhead. Unfortunately, the volume here on the last 3 days hasn't been as high as I would like. If I was going to get a breakout, I kind of want this. I want this volume here to start showing up and really take me off the lows. I haven't had that, so that's concerning. I do like the fact that we're starting to improve in momentum, and that is giving me somewhat of a lift. So anyway, with all of that going on, I think we still have to respect the fact that we're starting to get some better price action. And here is the advanced decline line for the NASDAQ. And while it hasn't broken out yet, it is giving us the highest push here in the last 6 to 8 weeks. So that's pretty important. On the cumulative, it isn't quite at breaking out to fresh highs here. We had a bit of a surge, but the New York has actually broken out. And so those things all add up to when the advanced decline line is trying to break out to new highs, you have to respect that. And as an example, here in June, July, August of last year, it broke out to new highs, got to September 1st, and rolled over hard. So we'll keep watching for that. If that's what's going to happen, this is going to be a shakeout. But I do think there's reasons to keep watching for it. So stick with me, and we'll see if we're able to break out. Here's the NASDAQ high-low, and what we see on this is it's stuck at 0, and obviously, we want that to get up into positive territory, so that's still pretty weak. Hard to get truly excited about that. From that perspective, it still looks too weak to be strong. Hasn't gotten going yet. And if we go up to the New York Composite, though, here's the advanced decline line for that, and that pushed to new highs here. And so that's one of the reasons that I'm getting more bullish, and it's also the biggest thrust we've had on the advanced decline in 2 months. So some serious hope trying to get into this here, and I think again, optimism isn't a way to invest, but we're starting to see pressure to the upside, rising lows in the advanced decline line momentum. So while we see that, I think we're going to have to follow this lift up, and if you want to participate, I think we have to get in now, and that way we can set our stops relatively close for an exit if we're wrong. So here's the New York high low, and again, this is stuck in this lower range. Really want to see some big thrust to get us going like this, and I don't know that we're going to get that yet, but again, the advanced decline line breaking out is pretty important. And here we have the advanced decline line percentage for the S&P 500. It hasn't quite rocked. Let me just hasn't quite rocked to a new high here yet, but without question, this is very close, and it is the highest we had in August. So it's definitely trending higher, not lower. I think we can all agree with that. And it hasn't broken this big uptrend line. So if that starts to break for the S&P, I'd be more worried, and that would really be a flip. Now, the TSX, the Canadian stock market, one of the things I like to watch for is it's weaker than most than the U.S. market, and so when it's weak, it's a good thing to pay attention to, and when it actually gets strong, that's a pretty good place to be. So what we see here is all of a sudden we have a new thrust on the advanced decline using an 11 period moving average. Now that doesn't mean we're out of the woods yet, but the one thing that's going on as this is thrusting higher, um, we're not getting the same sort of market action. We're not busting to new lows like we were back here. We've been holding these lows, and we've stayed in the range for a month here. So that's a little more important to me now. You'll see in November we kind of rallied back up and then had a false breakout and fell down. But look at how weak the advanced decline line was here. It tried to break this little shallow trend line turn up and then fail. That's what we're trying to do right here. But I think the fact that it wasn't dropping as precipitously in November, and here we've got a little shallower run up, we have to watch closely. We saw that same thing in September where it was tailing off. But again, there wasn't really any uplift towards the end of the month, whereas what we're getting here is clearly a push to higher ground. So again, I actually didn't expect it to happen now, so we'll keep watching. But the data literally mid this week started to turn, and so we're going to turn with it and not fight it. Here is the high low, and what we see on the high low is we're still stuck in this lower range for Canada. And if the energy stocks start to perform, and lots of them had 10% weeks, that would be a meaningful change in price action. And so that's what we're looking for, is if some of the commodities can start to push higher here. And we're going to cover that off in pretty big detail. Looking at the McClellan oscillator, this is back in positive territory here in the highest level it's been at for a couple of months, so that's bullish. And again, it can stay below this range of 40 to 50 and be no big deal. You can see the surge off the lows in the end of December went all the way up and gave us a really high reading, and that was a nice push. We haven't got that yet, but we've still had a pretty good rally. And so while we're trending higher, I think we have to respect that it is trending higher, and keep watching that. We also have a level that this summation index tends to bounce at. And we've seen this before all the way through 2017, which was somewhat of an uptrend. Well, it was an uptrend all year long. What we're seeing here is if we can bounce right here, this at least gets us to go back up and test the prior range. And that's kind of what I'm looking for as the price action hits here. So we've had 2 weeks that the summation index hasn't been able to surge higher, or has stopped the downward surge, and looks to me like it wants to try and turn it upwards. So again, it's not quite 1,000 point range, but if we could get up another 500 points on the New York Composite, and then we'll see what happens in terms of momentum. But to me, it looks pretty good. Getting into the NASDAQ summation index, this did the same thing here. It's paused its downward thrust and looks like it's ready to turn higher. We had these same sort of levels back in 2014 from really high levels, and it was able to turn back up. So we're going to watch and see if this has enough thrust to get all the way back up. And if that starts to fail, that's when I'd really be more concerned. So we're going to keep watching as this happens here. Looking at the bullish percent index, it's not uncommon to try and get down to this 40 level and bounce. The big thing I've been watching is this decline in momentum of the bullish percent indexes, and maybe we've got one more thrust higher here. That's what I'd be watching for. and just see where we go from here. But again, we pushed up to new 3-week highs on percentage of stocks above the 200-day moving average, and we've been wobbling here a little bit on the percentage of stocks on a buy signal, with only 43% on the NASDAQ. Still at a low level, but again, it was kind of midweek that the data started to turn. And really, after China said that they weren't going to keep hammering more tariffs, and we're looking to kind of resolve the thing more calmly. So that might be what we're watching for here. The NASDAQ 100 got back over 50% of the stocks on a buy signal, so that's obviously bullish when we were below and moving back above. And now 67% of the stocks are above their 200-day moving average. So again, we got to a level that was very, very close to a breakdown level, and we managed to hold above this 60% level. It's the Russell that makes me the most worried, but we're going to have to watch and see. Even the emerging markets tried to rally this week, so that was helpful. So looking at the New York Composite, we're at 45% of the stocks are on a buy signal, and 50% of the stocks are above their 200-day moving average. So that's a little more bullish than the NASDAQ, but positive nonetheless that it's improving. S&P 500 is back over 50% of the stocks on a buy signal, so that's bullish. When it was below 47, we were getting pretty scared. And here we are back at 60% of the stocks above their 200-day moving average. And again, I'd like it to be up above 65%, my red line in the sand. But, without question, this is the highest out of the last 3 weeks. So looking to see this improvement in momentum and see if we can start a rally from here. We're right at this major trend line. And it doesn't use the 2018 December low, but it's got lots of touch points. So I think that's the more dominant line. And we've had the 09 low and this 2016 low are the only two lows that didn't fall on this line. So I think these are pretty remarkable places to watch for. And if this trend line starts to give way, that's when we have bigger problems. So we'll keep watching and just see. It feels very uncomfortable to go long here with all of the news around the trade, but that's probably what makes it pushing ahead into this wall of worry. So we are at 61% here on the Toronto Stock Exchange. Stocks on a buy signal, and that's improved over the last 2 weeks, and we now have 62% of them above their 200-day moving average, which is up from 56. So a lot of stocks surged back above their 200-day moving average this week, with almost 5% of the market moving back above, so that's a pretty big change. Bullish percent for energy. I will say crude has held in really, really well here through the month of August. It actually made a higher low towards the end of the month. It's still tracking below its 50-day moving average, sitting right around $55. But the big thing for me is the bullish percent index is actually starting to improve a little bit. And I'd want to see everything get back above this 50-period moving average, the Exploration and Production ETF, the XLE, and the oil services. To try and see all of these turn up would be quite bullish. One of the things I'm looking at is the seasonality for oil heading into the fourth quarter is typically pretty good. And we're starting to see some extreme valuations in oil, as I mentioned last week, and on the Market Buzz shows this week. We are down here on this oil services index, OIH, and just using the left scale here, we're at 20-year lows on this. So if you're looking for something to be at an extreme level and watching to see if it can reverse, this is an important place to at least give consideration to it. We're well down here on the MACD for momentum on the bullish percent index. I'll try and explain that chart a little bit. So this MACD is actually for the bullish percent index in the background. And when it gets down here and starts to turn up from a deeply oversold level, that's a nice place to get long. We're definitely down. We're at -4. We can go all the way down to -10 like we did in December of 2018. But the big thing that we're watching for here is a higher low would set up quite nicely if the momentum will start to improve. So that would be good. Gold, clearly everything running very bullish on gold still. And we're going to talk a little bit about the low close on gold a little bit later. So let me just keep running on and we'll get into that in a second. Options expiration, September options expiration won't be way out until like the 20th or so of September. So we've got quite a bit of time in here, a full 5 weeks. So we'll see where that ends up. And that happens to be the week after the Fed meeting. And so the Fed meeting lays up into our last one was the end of July, and it's every 6 weeks roughly. So mid-September, and once we have that, then we'll see where the options market wants to go. The put call ratio you can see shot up to extremes here. It doesn't mean we're out of the woods. But what it does mean is we got quite a bit of fear going here, and now it looks like we're trying to take it the other way. We still have to break out of this zone, but I'd expect if we can do that on Monday, Tuesday, Wednesday, that would help a lot. I'd be worried if it stays in the zone, so that would be something more uncomfortable. Here's monthly performance for the S&P. We're still down roughly 1% since a month ago. That doesn't sound that bad. It's the moves that we've made here, down 5% and back up, blah, blah, blah. I was surprised at the resilience that the market held in here with all of the news facing it. And that's one of the reasons that that these moves in the advanced decline line make more sense to get long, start to find some opportunities rather than stay short. And we're seeing some improvement in the transportation indexes as well. So for outside bars this week, one of the things we had inside weeks on the S&P 500 and on the Nasdaq, where we traded inside the range of last week. The Russell still made a lower low and a lower high, which is concerning, but it did find support at this trend line that goes back about 2 years. So if that's going to hold, that's pretty bullish. Looking at the S&P 500, just the daily chart, this is going back 2 or 3 years here, you could just see we're working really hard. And if we can't get this going, the question is, are we in a period like we were back here in April, May 2018, where we rocked it for about a month and then started to gradually move higher? That's what it feels like to me. We're trying to do is work this in. We'll see if we can push out, but we also had good moves in Europe as well. So that was another distinction that was nice to see. Again, from a volume perspective, I wasn't very happy with the volume this week. So for the last 3 days, we just traded average volume, nothing exceptional. And for the breakout, I would have hoped for a little bit more volume. We did have slightly higher volume on Friday compared to Thursday, but looking at the price action, we didn't really have that big a change. So not a big deal, but one of the things we need to watch for here is if the Nasdaq starts to underperform meaningfully over the next couple of days, that will probably mean that this was a fake out rally and market wants to head lower. So I wasn't happy that this kind of drizzled down here in the bottom right hand corner to end Friday. Again, we don't get to pick everything being perfect, so we'll just keep working through it and see what we get. We still have this uptrend line in place for the NASDAQ 100, and one of the things we're looking for there is to make sure that we don't break this 3-year uptrend out of 2016, I guess 4 years now, that uptrend stays intact in terms of relative strength. So we'll keep watching. Again, the thing I want to see here is maintaining this trend line, staying well above this 7250 level. But the door is, or it's always darkest just before dawn, and it feels to me like we got the shakeout. We had the inverted yield curve for a while now. Everybody's expecting a recession. It doesn't mean it happens right away. It can give us some time to do that, but we'll have a lot of economic data come out the first week of September, and that'll probably tell us a little bit more. Again, we're still expecting some easing out of Japan and Europe. the conversation from the central banks doesn't sound bullish enough, but at this point, the charts are still holding up. So here is the New York Composite. You can see we're trading tightly inside this range here, have been for a year and a half. And this year it pulled back. My next candle or next chart shows a candle here or a bar where, we'd closed tightly the last 3 of the 4 months, had a very small range. And now this month we pulled down hard, but we still have a buying candle at the bottom, a long wick where we closed up towards the end of the month. And we're back above the 10-month moving average. So again, we were down on the month. We had a high volume month, but we still managed to push up to the center of the bar. So we can't get too bearish with that sort of price action. There's the Russell. What we see here is the histogram actually started to improve on the PPO. Doesn't mean it's over, but typically when you get these sort of bottoming patterns in the histogram, it's worth paying attention to. You can see in October through December, we started to improve, and then late November, we rolled back over again. So as long as the histogram and momentum is starting to improve, that would be a good thing to watch for on this chart. So this is the Russell Weekly, and again, we're trying to hold support. So maybe we only bounce up to the 1550, we'll see, but that's looking like the newest place for resistance there. I'm going to scroll along and get into the Toronto Stock Exchange. We broke out above the 50-period moving average, which was really nice to see. And we also broke above the consolidation layer that we had seen in the U.S. markets as well. But here in Canada, they'd already broken out. And one of the things, again, if Canada can start to outperform as one of the weaker markets, not necessarily outperform, but start to move higher, that probably suggests the U.S. market will do that as well. So if the weaker markets can actually take out these 1-month highs, it wouldn't surprise me to find out that the U.S. market does it right away too. We have this downtrend in momentum, and I think that's one of the critical risks. We're right at the zero line and at the downtrend in momentum. We saw this in September and October, and this broke down right at that particular moment. We're there. We're at the beginning of a month. There's lots of things for me to worry about. We also rolled down at the beginning of September last year after trying to rally. So does this look pretty familiar? Yes, it does. Briefly shooting above the 50-day for a couple of days and then breaking down hard. So I want to watch this to just see how the Canadian market performs. But again, you're starting to get higher highs and higher lows here. That's a definition of an uptrend, albeit a new one. On the weekly charts, higher high on the week, closed above this red horizontal resistance line, which is pretty bullish, and then made higher lows as well. So, hard to argue with that. And our PPO is still above zero. So if it can bounce one more time up here, that would be bullish. If it fails, obviously that would be a really negative indicator for us right at this junction in time and chart dynamics. So with the arithmetic mean, this is the chart where each stock has the same weighting, unlike a market cap weighted index like the S&P 500, where the size of the company based on market cap influences how much weight it has. What we see here is we did rally on this particular chart. We also had the histogram start to improve in terms of momentum. So all of these things are good. I think one of the difficulties I have here is this is probably starting to look more like the period of 2000, 2001, 2002, where it wasn't a clear breakdown. Look at how many times this histogram started to improve, barely got going, and then failed. And it was, roughly once a quarter, it kept rolling down and making lower highs. So with all those kind of things set up here, that's what it looks like to me wants to happen. But again, we're starting to rally off of these lows, and the advanced decline line is making higher highs. So it's definitely something to consider. The Shanghai Composite, this chart's setting up much better too. And one of the reasons that that I'm interested in it. What we see here is a higher low on the full stochastic. And as it's starting to base, this bounce off the 20 is a pretty impressive bounce. We see this here just before it took off and broke the trend line. And you can see there's a downtrend line here that we could draw across the tops. Any sort of breakout this week by the Shanghai Composite would be very bullish and would probably suggest a little more optimism on the trade front from that side of the water. The Nikkei is still sitting hovering in here. Even though August was so weak, I would have expected a weak market like the Nikkei to really start to plummet down. It did not. It basically moved down and held in this range. So I realize their central bank is buying stock almost every down day, or buying ETFs every down day. But at this point, it didn't break down. So still holding up. Nice to see. Here's the US dollar, and it pushed up to a big high out here on the right hand side. And one of the things that I'm interested in now is it's right at this upsloping trend line. And the question is, if it rolls over here, and one of the things that makes me think it wants to do that was the behavior of the EEM, the emerging markets, and the Canadian dollar as well. So there's a couple of things that all started to ring a bell for me this week. Now, again, it's early. So I would say if you're a person who really wants stability, this is the first week of the rally. You don't have to rush in. But if you're trying to catch a 2 or 3 or 4 week rally and all of a sudden it's going to roll over again, then obviously you kind of need to be in to make any money before it rolls over. So here, US dollar 97.50 is this red line layer. We pushed up almost to 99 cents here. And again, this 100 level has been resistance back in 2015 and 16. So we'll just see if that's what happens as we head in here. One of the concerns I have is the market gave it up. The stock market rolled over in late October, November, as the US dollar went on to soar up to higher highs. And commodities ended up falling into the 2016, call it January low. There was some that bottomed in February. But the big point I would make is if this US dollar starts to actually scream higher, it might reverse all of the things that I think are starting to set up in the commodities. So that makes it a little more difficult. But look at this push in the last couple of days, just bing straight up. And closing almost a full penny higher on the US dollar. And, last week it looked like it was potentially breaking the trend to the downside. After getting back up to resistance again, it rolled over and now it shoots back up like that. So there are so many reasons to be watching this momentum curve on the dollar, both daily and weekly. We can move this line up here to almost a horizontal line now in terms of momentum. And the real question is, does it have the momentum to get going? And I just don't have the answer to that because we've been teased by this dollar. Look at this momentum just jogging back and forth for 8 months in 2019. Nothing like a nice big run like it had back in 2018. We saw the momentum as it based out here kind of improve as it went positive. It shot up. Well, here we went positive, but we just keep jogging sideways in terms of momentum. But we are making higher highs here. So continue to watch the US dollar. I think it's really hard to call, but if the US dollar was going to go on a surge, which I have been expecting for so long, I'm almost exhausted talking about a surge in the US dollar. The big thing I think we need to focus on is how a surge in the US dollar might help. Now, on the other side, I mentioned it was up against that trend line. If that trend line is going to start to fail, I don't think there's any reason to cover the UUP today. If that trend line was going to start to fail, or price was going to start to fail at that top trend line, a lot of the commodities are set up for a bounce here, just in terms of momentum. So perhaps the dollar rolls over and all of the commodities get to go for a rip. Here's the euro, and it clearly drilled to a new low here, made a new 1-year low, and closed on the low, and we're getting right to this momentum trend line here. 2017, 18, now 19. If we were to bounce here and break above this trend line, that might be the final turn that we're looking for out of the Eurozone. And if we get that turn, then of course that that changes everything, and we'd see a big run in the commodities. Looking in on the Swedish krona for clues, it closed right at the low end of last week's bar, and last week was a wide swinging bar. So to me, it says that the whole thing wants to go lower some more, which would be dollar higher, and that's what we keep talking about. But this week, the dollar with that big 1 penny move was a pretty important change. British pound on the weekly doesn't look like that big of a deal. Higher highs, higher lows. On the daily, it looks a little different. What we see here is price action all week kind of made its high early in the week and then pulled back down and has been dropping for the rest of the week as the dollar surged. So hidden a little bit in the weekly data, but we're watching. And again, if all of these foreign currencies are going to start to drop, that's going to put pressure on the dollar. And we've been talking about that for a while. Okay, Japanese yen, big push early in the week, kind of like gold, and then down and finish near the lows of the week. So not that much different than all the other charts. It's just the fact that the yen has done that, and gold's kind of followed the yen higher. So if the yen was to start making lower lows, that wouldn't bode well for gold. Okay, here's the Canadian dollar. Again, just chopping sideways for the last 3 or 4 weeks. But we did make higher highs and higher lows this week, albeit a lower close. The PPO is above zero, and this makes it particularly interesting. I've got crude oil on the chart here, but let's focus on the dollar and then go back to crude. What we see here is a big base building in momentum. And in June, I mentioned we finally had a surge and we came up. So if we pull down to the zero level here and then start to rocket higher, that would be meaningful for the commodities. And you see this back in 2017 where we had a downtrend, rallied up and then pulled back down and then took off. The question here is now, can the Canadian dollar start to bounce here and the US dollar top out at that top trend line? It makes for a very interesting movie. If we were talking about a Hollywood plot, this is kind of right up against the top end of momentum, and then we'd roll back over and the plot would change right here. So that's what I'm watching for, just to see. Looking at the Canadian dollar daily, the PPO is starting to wind higher, albeit not with much momentum. Maybe it jogs another leg lower like it did October, November, December, and we really start to fail here. But look at what it did in August. It just ground sideways. There was no real pressure to go down. So that's kind of important, that it looks like this currency wants to hold up. The Aussie also made new lows and new closing lows. And that's going back to 09. But again, we're still, 7 cents off their main low from 2008, 2009 on the collapse of commodities. But it feels like we're at that level of depression on these commodities and currencies. And so, if we get any signs of hope out of the trade deals, we all know that the tariffs were starting today, but I think everybody would be surprised if they didn't start right away. And if we start to roll out of these tariffs, or they've already been built into the price in the markets, then maybe the markets can surge just with no new tariffs, and China saying they were going to proceed with calm rather than more. So as we keep watching here, all of these currencies are set up so they're about to fall, and the US dollar wants to go higher. Now that the US dollar is at the top of the trend line, it's a pretty important place. Again, the price of West Texas works in concert with the Canadian dollar. What I would like to see, Canadian dollar starting to shoot higher. That might provide some optimism for crude oil, because I think crude oil is held in quite well, surprisingly well. Okay, here's emerging market currencies, and what we see here is we're testing this May low in the currencies. We haven't broken this big uptrend coming across the bottom here, which is okay. And again, that's a 4-year trend. What we see here is emerging markets just dipped below this trend line and looks like it wants to turn up. And this is the same sort of shape that we see on the copper chart. I've got copper here in orange, but you see roughly here for the last 2.5 years, and copper dipping below, and again turned up one week doesn't make it a new rally, but all of the industrial metals turned up this week as we head into these tariffs. So again, it seems to me like we're climbing the wall of worry. And the emerging market currencies, CEW is the ETF, the emerging market currencies have pulled back down and we're right around the zero level. So a bounce right here would suggest a pretty bullish posture after testing it, bouncing higher, pulling back, and starting to take off. So as much as I had expected everything to kind of start to flush, if this is where we hold as we come into these new tariffs, it might be time to just get on board and ride this train. Okay, don't really have time to go through all the bonds. I'm going to briefly touch on a couple of things. One is the high yield is breaking, is holding in very, very well and looks set to go up to new highs above June highs. And looking at that, that would get us almost to to 18-month highs on this index. So pretty important, or on the CTF, pretty important to watch the price action here. If this is going to start to surge, this says risk on, and you want to own this stuff. For the 7 to 10-year bond, I will say that the RSI is at an extreme level going back 10 or 15 years. So if you don't feel like we're at enough of an extreme, 2016 we got up here to this extreme, and it once we hit it, it rolled over. And when we look at this PPO up at a 2% level, like we got back up here in 2011, and I think this was on the European issues, and in 2008, 09, but it was the October '08, like it was well into the financial crisis when this started to surge up to this level. So we're at extremes now. It also made it up there in January of 2008 and stayed up there until April. So I don't have the answer, but I would just say we're very close to some major extremes that were really only hit during the financial crisis for a while. And if we unwind this tape back into 2003, you could just see, we've had 3 or 4 instances where we got up here in the last 15 years. So this is abnormal times, and we want to think about it as probably reversing from those very high levels. The municipal bond fund continued to push to new highs and closed at new highs. It has got a wave in the PPO here, suggesting perhaps we're, kind of the dying waves of momentum, but we're still pushing to new highs again this week. And the 2-year went to new lows. So I must admit, when I saw the 5-year chart, we're sitting down here, and it couldn't rally into the end of the week. Where the stock market was. It's trying to base down here in terms of momentum, but again, it just kept drilling lower, so we made lower lows this week, and on the 2-year we did the same thing. So all of these, look at this 2-year, it was unable to bounce off last week's low, just keeps delivering these low punches, and I thought for sure that this was the chart that would start to set up much better. It did not. Looking at the 3-month, this was also a shocker for me. This looks like it's ready to roll over and go down again, and I thought it was all done. So again, continue to watch the bond market. It feels like we're trying to bottom here. It doesn't mean we will successfully. I could go through the bonds for a whole another whole lesson or another whole recording, but I think let's move on to something a little different, because there is some hope showing up here. So the transports actually pushed higher on Friday and then closed near the low, so that's not quite as bullish as we want. And if we extend this horizontal line, call it 10,000 over a little bit more, it is an important place for us to stay above. But the PPO is just starting to turn up here. So if we can get some sort of momentum in the transports, perhaps that would help. Looking at the transports on a weekly basis, the PPO is right around zero. It's a little bit below, and it's making lower lows and lower highs. But look at the histogram. It actually improved this week and looks like it wants to start to turn up. And the volume improved as well. So with that, set up, that backdrop, we're at new 2-week highs in In transport, that's not a big deal. But look at the full stochastic. Looks like it wants to turn up here. So that at least suggests stability starting to show up there. The airlines, I didn't see anything meaningful, bouncing off this red zone for the last 3 years. So, yeah, seen that movie. And then going on to the airlines weekly, a PPO right at zero, seen that movie. Nothing really going on there. But hard to invest in that, right? Here's the railroads. And one of the things about the railroads, it's continuing to make lower highs and lower lows and got up to the top of the range. So this is one that scares me. But I will say that the PPO is double dipping here, trying to make a base. And if we get some sort of a base in momentum and starts to turn up, that would help. Now we have a downtrend in relative trend strength here. So compared to the S&P 500, the railroads have been outperforming for 3 or 4 months. If they can start to rally up, that would help. Haven't seen that yet, so this is definitely a chart that makes me worry. But look at the full stochastics down at a level where it looks like it wants to start turning up. And we've only had these occasional dips down to this low level other than 2015. So, it's hard to stay really depressed when these things make a 1 year low, and this is actually the opportunity to buy the railroads PPO right at zero. It makes it harder to call for sure this week. I would say it's a pretty important week as we head into these 2 September weeks ahead with Chinese trade talks, the tariffs kicking in, then the Fed meeting. All of those things will add up to quite a bit. Look at the trucking, though. This is really interesting. All of a sudden, the trucking broke out to new 5-week closing highs. After that stab up in early July, it started to give back. Got right up to resistance, so call it 815, 830, 825. And what did we close at here? We closed right at 816. So we're within a few points of all of a sudden being at 1 year highs on trucking. And there was a nice Twitter feed article from the American Truckers Association, and that was from Bob Costello, I think was his name. Costello was his last name. But he wrote kind of a 6-tweet story, and what he said was that commercial trucking rates that are contracted trucking rates are holding up nicely. The spot rate jumps all over, and he said there aren't that many spot rates that are that concerning. The big companies are going to start to show differently. But look at this PPO. It's starting to move higher, was starting to roll over, and now turning up. So a dip below zero and then turning up is extremely bullish. That's kind of what happened back in here right at the end of August, and all of a sudden it took off to the upside. So if that's what's going to start happening on trucking here, I think you want to be more bullish than bearish. And this looks, right at this holding level. Again, last week we were starting to dip below the 10-week and threatening the 40-week moving average. And this week, with a huge outside week in the trucking, we moved up 50 points. And again, we're only 15 points away from breaking out to fresh 1 year highs. So that's extremely exciting and positive. Autos. We're not going to have time to go through them, but the car manufacturers, go look at the charts. There's actually some improvement showing up there. Ford looks interesting as an example. Here is XBD, the broker dealers, and what did it do? It was putting in all these red candles. We got a blue. PPO is starting to improve right near zero. So if this was a place to bounce, again, we'd have to just keep watching it. This would be a leading industry. If it could start to break out above these prior highs, that would be bullish. If it just gets back up to this trend line and then fails, let's say 2 to 3 weeks out, well, that'll be another story for us. But we'll keep watching it. But at least it had a big outside week this week, made lower lows, then a higher high, and closed near the highs. Utilities continued to perform well, but the volume's dropping back as it climbs up here. So still looks good. XLI, this had a big week. Didn't quite take out the lows from the prior week, but pushed up much higher and made a higher high above the previous 4 weeks and closed up near the highs. It was the highest close in 4 weeks. So all of that suggests good, and it's right near zero here, but it had been declining in momentum. So again, if this is going to turn after building this flat top and then all of a sudden surge and break out through the top side like it did back over here, that's exactly what we're watching for. And so we'll see. again, I don't have that much. I don't expect the global trade, the way it's slowing down, to really improve that quickly, but perhaps it's already happening, and we'll keep watching. So here's the SOX index for semiconductors, bounced right off this trend line. That's bullish. Look at the PPO, got just below zero. Looks like it wants to start heading higher. That's very bullish. So it was quite a week here that we had after, last week, everything kind of pulling down. It looked like it was going to fail and keep going lower. And then towards the end of the week, everything started to improve. So that's great to see. Okay, let's jump into the commodities because there's a bunch of news in here. Okay, on the monthly basis, this is the fourth lowest close we've had in commodities, going back to the 2016 low. So if you think we're near the lows, I think we're near the lows. Could it really start to break down a lot more than this? I think everything has to go fall hard. And as Art Cashin said, don't bet on the end of the world because if the end of the world is coming, it won't matter anyway. And so the other thing is if we're getting near these lows, and again, in a commodity, you want to buy it near the lows and sell it near the highs, not the other way around. All of the breakout trades in the commodities over the last 3 years would be very difficult, but buying near the lows would get you a pretty nice gain as the market ran from 166 to 200 is a 20% gain on the commodities, but lots of stocks ran nicely through that period. Anyway, hard to see that with the US dollar pushing higher. Again, if we're going to get a triple top on the dollar and it finally rolls over, this will be one of the sweetest entries on commodities in a long time. Okay, DBC trying to hold this upsloping trend line. I agree, it doesn't feel that heartwarming based on the Friday price action swooping down hard. That was really crude, put in a big lower bar, and we'll see that in just a second. Here's West Texas, and one of the things that's important to notice is we had an uptrend line going in West Texas. We're still making a higher low, albeit we did break that trend line, but look at as we broke that trend line. It wasn't like when we broke this one, we accelerated lower. We're doing exactly the opposite. We broke the trend line, and now we're actually jogging higher. That looks pretty impressive to me, the fact that as it broke, it spent 3 or 4 weeks down here and really had no downside pressure. See the same thing back in June, and then it rallied really well. Natural gas looks like it wants to finally, I know I've been here before, Jerry and a few others, if you're listening, you'll have seen this trade movie before, but again, it looks like it's trying to break this downtrend and start to turn up. It actually closed above its 10-week moving average. It did this once in early July, but if we start to get follow through here on natural gas, that is extremely bullish. So natural gas above its 10-week, oil still below. As we go through, lots of them are still below their 10 weeks. So we're definitely looking for when everything gets below the 10-week, like all of the commodities, there's been a very interesting tendency for everything to finally turn and rally. So with natural gas being one of the first to turn up, that would be exciting. Here's heating oil climbing for the last 2 weeks. That's diesel fuel. Here is gasoline, and it went sideways this week. It didn't continue to fall, and again, we had nice distillate drawdowns on everything, commodities, crude, and on crude oil, distillates, and gasoline. Corn is below the 10-week, soybean below the 10-week, and wheat below the 10-week. None of them had a great week. I mean, they stopped falling in 2 cases, but wheat continued to get hammered or shaken out. That's a farming reference, going through the sieves. And then here's gold, a little bit of a pullback here, and while it doesn't look like much, we'll talk about that in a little bit. Silver right up against this big blue trend line, so we're going to see if that matters. Copper. So copper has been jogging lower, but again, much like crude oil, as it broke below support here, it didn't just kind of flush down like it did back in here. It's actually come down and looks like it's trying to make a base. I have one chart that I want to show you in a little bit, the JJMTF chart, and it actually is an industrial metals tracking ETF or ETN, and what it did this week was moved above the 200-day moving average, which was very surprising to me. So something to keep in mind and definitely worth watching. Okay, livestock, just too boring. It's just living down in the bottom part of the cellar. So below its 10 week. Here's sugar below its 10 week. Coffee below its 10 week. Go on to cocoa and cotton, and cocoa's below its 10 weeks. Cotton below its 10 week. Go to marijuana, they're below their 10 week. Everything, and this one just continues to break down here. It's testing the December lows, so we'll start to watch and see if that can get a turn. Hexo had a little better week in that group. Coal and steel actually had a nice lift this week, so still below their 10 week, but at least trying to turn up. So that's somewhat hopeful. And looking at lithium and rare earth metals, both of them turned up as well. So everything was trying to lift. And again, we're a long way from the 10-week moving average, the 200-day moving averages, or 40-week. But if we're going to start to get some momentum this week, it felt like a lot of things were trying to turn. Here is the energy Goldman Sachs Commodity Index for the energy sector, and you can see we're right on this trend line. So if there was a place to expect a bounce, wouldn't that be nice? And here's the December low, and it's pulled back, and if all of a sudden we started to get an improvement here, this would be good. You could see the histogram started to improve slightly. Again, early days, but if we were going to start to get bounces off the 40-week moving average, or sorry, the 40 period level on the RSI, that's really important. So you can see in a bull market, that's where it should bounce. So if this was a bear market and it starts to come up here and hover and then takes off to higher highs, that'd be great. And again, we've been under these trade tariff pressures for about 18 to 19 months. Starting to get to the long end of bear market strategy. So if everything can hold out here and break out, that would be great. This is obviously precious metals. Let's go down here to industrials. And what you see here on this industrials chart, well, it's downtrending. Look at the momentum. It continues to make higher lows. This would be its fourth higher low if it does here. And if it can start to break above this downsloping trend line, I want to get more bullish for sure. Back in October 2015, 2016, it was that kind of break that gave us the big signal to get long. So again, perhaps we're there and we're starting to see that turn. Too early. I slipped over one chart that I should show you. This is the total commodity index. And what you see here is this big 4-year trend line that we're sitting on. If we could come down here and test this and take off and break above this downsloping trend line that's been going on for a year, this would be a pretty bullish turn. And you can see from a momentum perspective, the trend line's right at 0. What we want to see is this big 4-year uptrend down here, 5-year uptrend down here, come down and make a higher low and kick off and get going on a big commodity run above 0. That would be very bullish. So we want to see that. Baltic Dry Index broke out to higher highs this week. And a lot of people think that is from all of the commodities demand. One of the things that's happening is a lot of ships are being parked because of their single hull structure, and they're not allowed into so many ports. So I think that might be part of the reason that this is breaking out to higher highs, is some of these old ships are being parked and people can't use them anymore. So that's a big issue. Okay, here is crude oil, and what we see on, sorry, not crude oil, XLE, and what we see is a turn up here in the PPO, like it wants to try and go higher, so maybe it's a couple of weeks, I don't know. We had the same sort of signal back in here in June, and that was a good run for the month. In November of last year, it didn't do anything for us, so keep watching. It feels just so desperate that as a contrarian, it feels better to almost get long here. Here's the crack ETF, and you can see we've been down below this support line for 3 or 4 weeks, but much like everything else, it didn't really plummet. It actually held in there and stayed in the range. And look at the full stochastic actually making a higher low here and getting ready to cross its signal line. Yeah, it actually did. Signal line is at 1605 and the full stochastic at 1646. So we actually got a buy signal on crack. And we have this uptrend in momentum. Looks pretty good. We did break the 1-year downtrend in momentum back in June, July. So a higher low here, a second higher low. This is a really nice place to get long when that sort of thing shows up on the chart. Okay, frac weekly. These are unconventional oil reserves. And look at this, it's held in very tightly for the last 3 or 4 weeks. Momentum still dropping, but you can see the histogram started to improve, so the rate of decline is improving, or not getting as bad. So that's good news. And again, right at support, a level we'd like to see it hold in at. So lots of things here look like they're trying to base, even if it's only for a short period. We'll find out, but they're definitely trying. West Texas trying to hold this upsloping trend line, closed right on it. That line I had there before, it was based on these points. We had one dip below it. Now this week we dipped below it with this start of the week and then closed right in the middle of the range. Who knows? Crude oil right around the zero level. So when it broke this uptrend, that was cautionary. Now what we want to see is this actually turn, break higher, break this 2-year downtrend, and that would be very bullish. We saw the same sort of thing in 2017, and look at the ramp we had in crude. So keep watching. I know it feels different this time, but we actually got a full stop buy signal here with a much higher low above 20. This is quite bullish, actually. So we'll keep checking it out. I'm moderately optimistic that things are trying to get better. West Texas, this big downtrend, you still see it there in red, and it is just glued to it. And again, we've got this uptrend going. This was 50, 60, 50, 52, now trying to hold this horizontal level. You know, the real question is, can we start to push into positive ground here? And if so, that would be great. If this is the fail point, it's very critical timing, because it just started to make things look a little bit better with the 50-day crossing above the 200-day, and then only to fail right here. So where crude goes over the next week, I think, is a pretty important sign, but it sure looks like it's trying to bottom. Natural gas, I already pointed it out. Let's just jump in on this chart. So we got this downtrend here. Any break above that would be quite healthy. So let's watch and see that. On the RSI, it's finally trying to push above. It's actually at the highest level it's been at this year. So that's promising. Nothing new on uranium. Let's go to copper. Trying to bounce off this low area, still made a lower low and a lower high and closed in the middle of the bar, so not that optimistic. But what you do see is this is kind of the typical lows we've had for the last 10 years in terms of the PPO momentum, other than 2009. So this is getting down towards the extreme end. We're at 2.5. It can get as low as 5 or 4.5. But you know, the real question would be, if we're starting to see industrial metals turn up, that would be great. Okay. Copper ETF, just to kind of look in and see what's happening. Again, we're just kind of trying to hold these lows after breaking below them, and a bit of a downtrend here starting to improve. This is a PMO, not a PPO over here, but if you start to see this turn up, that would be helpful for copper. So watch these next week. The copper miners, nice kick up here, and we started to see this turn, so that's bullish. If we look at steel, one of the things I like here is it had the highest close in 3 weeks, not the highest price in 3 weeks, but the highest close in 3 weeks. PPO getting back down to the level of December of 2018, and the full stochastic has given us a buy signal. So some things starting to improve. And again, after falling for 6 weeks, maybe we've had enough down and we can start to go up. Actually, this chart's... Let's just get into gold. The reason I want to cover off gold so much is this bar here. This is the first time gold closed at the low end of the bar, or almost right on the low, since way back in here. So this was the low close in here, and pretty much everything else always closed well off the lows until we got to this one. So this is the first time, and we saw it on very high volume, the highest down volume of the whole run. So it just adds suspicion on gold that maybe these bond moves and the gold moves are done. Getting into the rest of the gold here, GLD, you can just see this PPO is way up at a high level, so if it pulled back, who'd be surprised? And then looking at GDX, what we see is same sort of thing. It had a doji candle up near this prior high. We'll find out if it's got any more strength, but it looks to be getting weak to me. Lumber is an interesting setup, and I've only got a few seconds left, so I'm going to speed through this. Lumber is trying to hold up here, but look at wood, the ETF. This is starting to build a nice bullish pennant or a bullish wedge, and a breakout here would be helpful, and you can see lumber's momentum is starting to turn up. Okay, here's the wood ETF, and again, new 4-week highs. PPO looks like it's getting ready to turn full stochastic, making higher lows. All of that is bullish. So thanks for taking the time to join me. That was a rush through all of the charts, but I think the critical thing is that commodities look like they're trying to base here, even while the US dollar pushes higher. Hang on. We'll see if it can break out next week. Thanks for listening. Bye-bye. Okay, so thanks for watching. Have a great weekend. Time to go hit the golf ball. Bye.